All right, good morning, everyone. Let's get going. All right, interesting week ahead of us potentially. We had a Friday. We had a little bit of a sell-off in the S&P, in the Nasdaq, and the Dow. A little bit of a bounce off of the lows of the session. Still haven't seen any real significant volatility out of U.S. equity markets. They've kind of been leaving the bigger volatility for the other markets around the globe and the other asset classes. We continue to see a rip around in commodity markets. We're seeing some big moves in currency markets, and obviously the bond markets have been active for a little bit longer. So we're going to continue to watch those and watch the leaders there for a real idea of as to where the market's going to go. We had some retail sales number on Friday, August, that rose 0.6% in line with the expectations. Solid there in the States. T-Mobile solid on some earnings. But other than that, there wasn't a whole lot of leadership in the market, just maybe a little bit of a profit taking going into the weekend, and I think maybe guys a little bit nervous ahead of the Scottish independence vote. There's a lot of all the polls right now are really showing kind of a gridlock in what's going to happen. So markets may be starting to get a little bit nervous as we get closer to that. If you look at what happened in Asia, we did have a bit of a reversal out of Shanghai. Not so sure exactly why it ended up reversing, but especially after some worse than expected data. But we had the rest of Asia that was a bit soft this morning, and spreading into our index as well, obviously opening up down about 150 points this morning. So we'll have to see how this continues to play out. Like we said, we continue to see soft numbers out of China. Industrial output for August rising slowest growth in 6 years. So yeah, I mean, as you can see there, and definitely the way that the data is coming in China, I don't see any way possible that China can get anywhere close to that 7.5% growth target. So continuing to see pressure on some of these diversified miners and things like that on the back of weaker than expected Chinese news. On that point here on the commodity side versus the dollar. So obviously now the U.S. is taking, winding down the quantitative easing programs, which should be done in October now, which is basically a touch over a month away from when we'll actually be completely finished with it, unless something drastic changes between now and then. You're seeing that the dollar obviously picking up some serious strength, and it's also picking up strength because the rest of the commodities around the world suck at the moment, and they're doing so terribly. So because of that, their policy is getting looser, U.S. policy getting tighter, and you're seeing a huge effect on the commodities market. I mean, that's wicked. I mean, if you go back to July into September, I mean, we've fallen over. We've fallen about 12.5% in the commodities basket, and that's just a beating in 3 months. So, or 2.5 months really. So I mean, when you look at that, I mean, that really throws a gauge to you as to why our miners have been so soft, why we're starting to see these movements in equity markets at the moment, and it had to be expected. I mean, we know all the buying came into the commodities markets as the quantitative easing was getting the injection. You knew the inverse was going to happen when this thing started to wind down, and it's really played out in size. All right, corporate action today. We got nothing in particular in terms of earnings or anything like that. We did have SAB Miller that made an approach to Heineken on the weekend. They made an approach to the family, undisclosed offer. They basically have said that they shot it down. They're not interested in selling, but they're doing that to try to protect themselves from an acquisition from InBev. That's the real talk in the market. There's a lot, there's a lot of talk over the last few sessions about Fitch is going to downgrade InBev's debt if they come after SAB, and that so there's been a lot of chatter over that in the last few sessions. Not really sure exactly how this is going to impact SAB. Obviously, the bid was turned down this morning, and then people are still concerned, or they're still concerned, obviously, that InBev's going to come for them. So there could be some moves around SAB this morning. Just be careful there. We've got a few stocks going ex-div this morning. That's Naspers, the CLI, that's GND, that's SUI, that's S&T, the GRT, and MSMs. So not a whole lot of major divvies there, but just keep in mind for those, just keep an eye out for those on the open. You don't want to get caught there and forget that there's a divvy in a stock. If we look at, there's also this morning, the JSE did some testing over the weekend on new systems testing. They tried to revert back to the old systems. Apparently, they haven't. The reversion back to the old system has been unsuccessful, and the opening auction is going to be delayed. You'll have to keep an eye on the JSE website this morning. They said that they're going to continue to update us through their website for when the opening auction is actually going to be. So just be mindful of that. They're probably not going to get an uncrossing at 9. All right, we had Chinese data. Over the weekend, we had Chinese retail sales softer than expectations. Industrial production really is quite shocking. When you look at that relative to the expectation and relative to the prior number, we're really going soft there. I think it's a big story in markets, and I actually think that the markets, it's been paying attention to it, but it seems to be kind of getting worse at the moment. And I think if it continues to gather steam, we're looking at the second biggest economy, and it's gaining pace, obviously, to the U.S.'s economy as well. So it's a big power around the globe. So it's a big story. And then we've got an ECB trade balance at 11. We've got Empower Manufacturing in the States later, as well as industrial production and capacity utilization. All right, let's get into the maps. We've got a bunch of stuff to talk about. We got extra time, so I'm going to just keep you guys busy today. All right, banks under pressure big time over last couple sessions. A big part of that, obviously, is because of the ZAR. We're looking at 11.05 right now on the RAND, which is just hideous. I actually should have a look at that. Let's just have a look at that since we do have extra time this morning. And I mean, we called this one a few sessions ago when we got up above 1080. I think we came in the morning and we were at 1081, and we said it was going straight to 11, and went there, literally almost went there in the day. The next day it did get to 11. Today we're breaking through 11. I actually think that you can probably go out there and say that we're going to at least see the height of the channel, which is going to take us to about 1110 on that initial move. But I mean, if you look at the big picture here, let's go out a little bit. And you see really the downtrend that we've been in, and the rand's been wicked. We're looking at dollar first here, so that's why obviously it looks like we're still in an uptrend. We managed to come down and we held this trend line support so beautifully. I mean, it's incredible. But what was also interesting is that we kind of held right at support there as well. So this thing continues to just show beautiful symmetry in terms of right on the lines and everything. When you take where this I think this pattern was looking most accurate here, or most that you can take the most out of, is this flag pattern here. Out of this long downtrend in the rand or uptrend in the dollar, we flagged out here, and we consolidated. We moved out to the right after we got above the flag, and now we're breaking out. I think this target is to literally as low as 12 rand in the the next couple months. So just keep that in mind. I really think that that's a real possibility. No one thought this thing was going to be at 11 a year ago or a year and a half ago. We're obviously over 11 now. I think we're going to go to $12 in the not so distant future. Just think of how that's going to impact certain industries, and I think that's obviously one of the reasons why you're seeing the weakness in the banks. So I'm going to go back to the banks here, and after that long-winded explanation. Banks, you can see dropping support. So this is ABSA. We talked about this level the other day, and we're kind of testing around here for a couple sessions. ABSA dropped, or Barclays Group Africa, whatever you want to call this friggin' thing. Dropping support there, and really think it has reasonable downside from here. First stop would definitely be some sort of lateral support here that comes in at 160, but that's a very first stop. I think we're going to go lower than that, so just keep that one in mind. Well, let's look at Standard Bank. Standard Bank also dropping real support. We talked about this the other day. That was the last little level at 136, which we dropped on Thursday. We also came out of this little, I don't even know how I should even go about drawing this, maybe a little, this flag, this bear flag that happened here, or ascending triangle. We dropped out the bottom of that. I think that we're going to come down to at least the 130 level to test some sort of lateral support from where we really broke out from before. I wouldn't be surprised if we came to as low as 120, especially if the rand keeps showing signs of weakness. All right, first rand also, you can see your first rand dropping major support on Friday. Thursday it was kind of borderline. I think we pointed it out. I think that we're going to probably come into support down around here from where we really made that big breakout from before we put consolidation in and pushed higher. We're looking for about a 41.30 potential target in first rand on a pullback. If we look at Steinhoff, another interest rate sensitive stock, this one's going the other way after earnings the other day. Market liked it. You can look at this from there. You can look at it from here. Either way, we're flagging. We've broken out. I know we did show this the other day, but we're finally starting to get some confirmation. We had some big players like Christo Fises of the world, and that's starting to get involved on the long side in big volume. I think just giving the market some real confidence. And it seems like the soft holders are really just have been shaken out here. I think we're going to get to $56 in the next couple sessions, maybe on Steinhoff. If we look at Aspen, I just want to show Aspen here simply because it made a hard reversal candle on Friday. I mean, you can see how vertical this thing's been in the last few sessions after earnings, and I really think that we're probably going to come back here and consolidate maybe around somewhere between the 320 to, call it, 324 level. I think we're going to probably get a little consolidation down to there in Aspen. And Cecil, and we talked about this one the other day. I mean, it's really had a big reversal. If we draw it like that, it's looking a little bit inverse head and shoulderish. This thing's traded shocking over the past few sessions, probably just following commodity baskets down here. But you can see around this sort of level, maybe around 614, 615, somewhere in that level, or maybe 615, call it. There's so many wicks there, 1, 2, 3, 4, 5. I mean, there must be 10 or 12 over the last 3 months where we bounced and reversed off. We did that on Friday. Today will obviously be a big test. I think we definitely come down to test that at least right on the open. If we can reverse above that level and push above 20, then I start to get a little bit more bullish on this thing. And if we, like I said, if we can start to get above maybe Friday's highs, then I think that this thing will be turning around and potentially can make a real nice inverse head and shoulders here. And Cecil, remember, this is one of the biggest benefactors from a weak rand. So yeah, keep that in mind. And then the other one that's obviously also a huge benefactor from the week ZAR is Naspers. We're going to jump back and show you on look at a 5-day chart here. You can see we really gapped down hard from the 1340-ish level, and I think that that we could potentially this morning. You've got Tencent that traded really well, even with Hong Kong being down. You can see obviously we gap down from up here. If we trade above this level, above 1317, and can actually get above it and can hold above it for more than a couple minutes, then I think that we can potentially make a move to fill the gap here. I think that this stock has probably seen the selling that it's going to see ahead of the Alibaba listing. I think it's underperformed big time. I think that there could be a really interesting play here setting up, particularly because the rand's been getting hit so hard as well, and you don't see this one in the rand like you see it in some of the other dual listeds. So it doesn't really usually make up that ground as quickly, but it'll make it up in the numbers in the long term. So just keep that in mind. We get above 1317 in Naspers this morning. We could fill a gap up to 1340, and that's it for today, guys. Good luck out there.